And I am live from Calgary, Alberta, Canada. Hey, it's Uncle Bruce here. Welcome all to the home studio here in Calgary, Alberta, Canada. Um, Let me just mute that. There it is. It is Monday, November the 3rd, 2025. I have to look at my computer to see what day it is. I don't even remember. How you doing? Auntie Jen has told me she likes the beard. She kind of likes it when I'm going. So it's still under construction. I don't know what to make of it. You guys let me know what you think of this. I have no idea. Thankfully, the worst of it for me is the first week because it sort of itches. But now that's going a little longer. It doesn't do that anymore. But now I see myself and I'm going, who is this guy? I don't know. Hi, everybody. I had some trouble this morning. I was trying to do a community alert message to you guys to let you know that I'm going live. I can't figure out how to use it. YouTube has made changes. I can't find it. I don't know where I'm supposed to do that. I did do a poll question this morning, so if you want to check out that, let me know your thoughts. And thank you, everybody, for that. Thanks again to every one of you. You know who you people are. You folks know who you are. All of you out there who said hi to Jen and I while we were on the road, who were very supportive of the trip that I took. Also, those of you who made donations to our cause, you guys are fantastic. This extra pocket money, makes a difference. We thank you. We thank you. Those of you who've been picking up classes since I've been away, not many, but a few of you, way to go. I'm thinking about class number 20. I'm open to suggestions. If you have any thoughts, what should Bruce do for class number 20? What topic? What would you like me to cover? I'm also available again now that I'm back. I am now available to schedule one-on-ones with any of you that would like to have a one-on-one session with me. Let me know by just sending me an email. The link is down below. Or is it? Maybe not down below. I have a suspicion that I'm so rusty at doing this. I bet you I haven't even put my address down below for my email. Here it is right here. It's brucefarm@hotmail.com. You can send me a message there if you want to have a one-on-one. And we'll try to schedule a get together and see what we can do. What else? Welcome all to the program. Thank you for popping in. Great to see you all. Like I said, it's been an interesting 93 days for me. Leaving Canada on August 1 for Tokyo, having finished talking to you guys at the end of July. And doing Japan and Singapore and Dubai and then Europe, and getting together with Auntie Jen, and then getting together with Auntie Jen and I getting together with our daughter in Switzerland. That's always a great thing. And so it's been a very interesting trip, to say the least. We have been, Jen and I, when we get ready to have a bite to eat, we clink glasses and we say, thank you, YouTube. Without YouTube, none of this lifestyle would exist for us at all. The fact that I have just circumvented the globe would never ever have happened. No way. And you folks having found me on YouTube, well, there it is. Thank you all. If you don't think that I think about what YouTube has meant to me, you do not understand how I think. YouTube has been fantastic for Jen and I. Now, markets. Let's talk about the markets. Welcome all to the program. A couple of things that I was, I'm observing here. I'm trying to observe everything, and in plain English, tell you what I think is going on, and what you should be watching and looking out for, paying attention to. I read this morning that, and this is nothing new for you if you're a regular watching me. The S&P 500 index, which is the biggest index followed by most investors around the world, the S&P 500. It's trading right now at 23 times earning multiple, but that is 12-month forward multiple. Now, you may or may not understand what this means. just a real simple example. If I have a public company out there and they've got a million shares in existence and they make $1 a share in profit on an annual basis, and they're trading at 10 times a share right now, $10 with a $1 profit per share. That's a 10 factor, which means the stock is trading at a PE multiple, a price earnings multiple of 10. But if the estimates for the company for the next year are very good, and the thinking is that they're going to double their earnings to $2 a share next year versus this past year, then the stock is trading at $10 a share now with a $2 expected earning per share performance. That is only a factor of 5. In other words, the price earning multiple is now 5 to 1 future 12-month future earnings. Now, if they do the reverse and they don't do that well, they only make 50 cents a share instead of $2, not even $1, they only make 50 cents a share. At $10 a share on the open market, an analyst might say, I don't think they're going to make $2 a share next year. I think they're going to make 50 cents a share. And at $10 a share, that is a 20-time PE multiple right here. So I feel as an analyst, some are saying, this stock is trading at 20 times forward multiples. So now you have to decide, well, what's the right price and what's the right PE multiple here? Is the market as a whole, the stock market, the S&P 500, raising its earnings sufficiently enough to convince analysts and investors to buy shares at current prices, because even though 23 times PE multiple, forward multiple is where we're trading at, the street, the whole stock market globally is thinking, I think the market can make 10% more money next year or 15% more money per share next year. And based on that thinking, the 23-time earning multiple that we see now for next year, a year from now, if the prices of the shares are where they are now, the PE multiple going forward might only be 18 because higher earnings are coming through with the share prices where they are. Now, if more people believe the market is going to make, the stock market and the stocks that are trading publicly are going to make much, much more money than analysts have been predicting or anyone else, then the PE multiple might stay at 23. But the earnings per share, as they keep coming out at us every 90 days, we have to adjust the forward-thinking earning potential of each public company, which means we have to adjust the thinking of the forward PE multiple, which means that if the stock market is going to stay at 23 times forward earnings, 12-month forward earnings, and earnings keep coming in higher and higher and higher, the prices of shares will go up along with the index's values itself. The reverse is true if the reverse happens. The 10-year average for the S&P 500 is 18 times forward earnings. So normally the S&P 500 would be at 18 times forward earnings. It's right now at 23 times forward earnings. And this isn't like the last month or two. We've been doing this for a couple of years, and there's been a lot of talk out there about, is this market overpriced? When is this market going to come back to normal? Would it even go below normal? Would it trade at 15 times forward earnings if we feel pessimistic about the economy? All of this is constantly being debated every single day of the week, of the month, of the year. And right now, we're at 23 times forward earnings as an overall number. Now, if you want to take out the most successful 7 stocks on the planet, the Magnificent Seven, and then look at the market, you'll have a different PE multiple. You'll have different prospects. If you only use the 7 big stocks, the 7 Magnificent Sevens, you're going to have a different multiple, and you're going to have different projections. If you lump them all together into 500, there you go. You got 23. Each individual stock has its own individual price earnings multiple, its own forecasts, its own expectations, its own group of promoters or of analysts that cover it with their own opinions. And that's why the market is what it is. It's a free market where you can put your money where you want it to go and how you want to do it. And there's the issue. I just wanted to bring to your attention that we're at 23 times 12-month forward earnings for the S&P 500, which is at record highs. And analysts who've been around a long time and historians say this can't last. This cannot continue to be sustainable. Now, no one is saying until this afternoon or until next week or until a year or two from now. No one is able to say when this trend ends. Hints, yes, we have indicators out there that might tell us if and when we lose the momentum of this market. One is forward earning projections. If the forward earning projections of the market as a whole, or more stocks than not, is lower, then the anticipation is maybe we're not going to be as good next year as we were last year. Maybe we should be 5 or 10% lower in price, which would make the 23 PE multiple a 21 multiple, a 20. Maybe we're comfortable there. Other factors are slowing economic activities, interference in the markets when it comes to weather, wars, politics, you name it. Higher interest rates, higher inflation that eats away at profits. There's a myriad of reasons why markets cannot keep going up or can keep going up or will go lower. One little indicator I like to follow from time to time that I'll mention here, I think you should pay attention to out there. In plain English, it's the folks at Berkshire Hathaway. At Berkshire Hathaway, which is the Warren Buffett founded corporation, the one that everyone's followed since the 60s. Berkshire Hathaway is now sitting, as of right now, on $380 billion of cash. $380 billion in cash. Now, what are they doing with the money? All right, they've invested that money into bonds. Okay, it's in the bond market. So Berkshire Hathaway earns interest on this cash, and they don't put it all into one bond from one country for one 5 or 10-year window. They have spread, and they are spreading $380 billion globally into government debt, corporate debt, and are hauling in interest. Believe me, trust me on this, they don't only put the money into the bond market and hope for the best. They also buy insurance on the bonds they buy. Okay, so if they're buying bonds of American Airlines, I'm just going to pick on any outfit, the insurance on American Airlines bonds is more expensive than the insurance on, say, the Government of Canada bonds, or the Government of the United Kingdom bonds, or maybe Apple bonds. Apple bonds are more secure than American Airlines, but the US government ultimately is a pretty safe bet. So Berkshire Hathaway has insurance on all of their investments, whether they are into American Airlines or not, doesn't matter. But their corporate bonds, their government bonds, and everything in between, their treasuries, 30-day, 90-day, 1 year, 5 year, 30-year notes, they're covered every way to Sunday. Just like every other institutional entity out there that is in the bond market. They are all buying insurance product to protect themselves. And there's a market that exists just for that. So, all right. Berkshire Hathaway, though, at $380 billion in cash, has been a net seller of stocks to raise this capital, to raise this amount of money. And as of the last quarter, they were net sellers again. In other words, take all their buys and sells. They're always buying and selling stock. This is a nonstop movement going on here at Berkshire Hathaway. But at the end of the quarter, they are holding fewer dollars in stock than the quarter before, or a lower percentage of their worth is in stocks and a higher percentage of their values are in bonds. And this has been going on for 12 straight quarters. Now, a quarter, there's 4 quarters in a year. This is 3 years in a row that Berkshire Hathaway has been a net seller of stock every quarter, 12 in a row, to now be at $380 billion in cash. One more thing. When they started becoming net sellers 3 years ago, and they didn't know then that they would still have a 12-quarter streak on the go today, they're just going with it. Like all of us, they're watching the markets. But back 3 years ago, they didn't have $380 billion in cash, but they also didn't have $0 billion in cash either. They did have a cash balance 3 years ago. And you can always chat GPT or Google the info any way you want to see, well, how much cash have they been sitting on a year ago, 2 years ago, 5 years ago? I'm sure that's available. But trust me on this. 380 billion today is a record, but it wasn't at 380 billion 3 years ago. So they have been raising cash by design or just the way the market is telling them to be more sellers than buyers. That's what they've been doing. Anyway, that's 12 quarters in a row. That's an indicator to keep an eye on. Smart Money keeps asking, why is that? I mean, if they're sitting on 380 billion, why can't they find something to buy? Why aren't they getting into deals? Why aren't they investing this money into company mergers and acquisitions or the funding of this AI thing? Well, you have to hand it to these guys. Berkshire Hathaway probably has been selling bits and pieces of stocks they've bought 5, 10, 20, 30 years ago that have appreciated very, very well, including companies that today are in the AI business, and they have been cashing in. And they are net acquiring cash against holding stock. Another little tidbit for you. AI stocks, okay? Artificial intelligence stocks. Of all the 500 S&P 500 companies that exist, 41 of the 500 are considered to be AI companies. All right? So 41 out of 500. But if you take the value of all the public companies in the S&P 500, in other words, the market cap, and that includes Nvidia worth 5 trillion, Apple worth 4 trillion, and everyone all the way down, all 500. The 41 stocks that make up AI account for and represent 48% of the entire market cap of the S&P 500. Almost half of it. So whatever the market cap value of the S&P 500 is, and I don't know if it's 25 trillion or 30 trillion, it's trillions. Almost half of the value of the S&P 500 market cap is made up by 41 stocks that are in the AI business. So you and I have been reading now for the last few weeks and months this disturbing trend of layoffs that are being announced by large companies, because those are the ones that make the headlines. All the thousands of mom and pop small companies that lay people off, they don't get the front page of the New York Times or the Wall Street Journal. But the big boys like Amazon and Apple and Microsoft and anyone else, they've announced layoffs. And we are hearing now 5, 10, 15,000 layoffs of white-collar workers that are being let go. Now, it's possible that this is a one-year program, not a one-day program. It's possible that over the next year, that's how many people will be let go. It is possible that out of the 250,000 employees that Amazon has, for example, letting 10,000 go might be attrition. That's how many retire anyway. Remember, the average life expectancy of a worker is 40 years max. Really, think about it. You're graduating school at age 25, 30, depending whether you're a high schooler at age 20, a college, master's grad at 30. If you're 25 and you're working now full-time for real, you're supposed to retire at age 65, aren't you? Theoretically. That's a 40-year career. Every year, 1/40th of the workforce, at least, turns over. You gotta get, not getting rid of, but you lose 1/40th of the workforce as they turn 65, and you add to the new workforce at age 24, 25, you bring them in. So if Amazon is saying, well, yeah, we're letting 10,000 of our 250,000 people go, That's 1/25th of the entire workforce. 4%. They're letting 4% of their workers go. Well, it's 2.5% a year natural age attrition. So really, wait a minute, Amazon, you're going to lose 2.5% of your people anyway. And maybe you were going to lose more than 2.5% anyway, because not all people live to be the average age of the world's demographic. United States, the average age for a male is 70 something. For a woman, it's 80 something. Hey, people die in car accidents. People die of cancer. People die of a heart attack. People die, many other reasons. Okay, they don't get to 65, right? So the theory is maybe 3% of the workforce naturally disappears every year, and this 4% reduction is only really a 1% reduction of workers. And that could be just a few organizational adjustments here and there. 1% is hardly an issue. 15%, 20%, now we're talking. Anyway, we are hearing the stories of mass layoffs. They make the headlines. And what we're hearing in the same publications that have that story, right over here is another story all about AI investing. How much money is being put into AI, and how much money is AI representing now? We hear stories about power grids are being upgraded massively to handle the power needs of AI. I ask myself this question: if the AI savvy corporations out there, which will, all of us will be AI savvy eventually. It's going to come. We're all internet savvy now. When we weren't internet savvy in 1993, we're internet savvy now. We're going to be AI savvy in 20 years. What I wonder is if 35% or 40% of all employees today that make more than, say, 60, 80,000 a year going or higher, if all those folks are losing their jobs because AI is going to take their jobs, what are those people going to do? And how do the corporations make more money every year if 40% of the highest income earners, other than the top executive suite people, right? So I'm talking about the 50 percentile earners up to 80%, that 30% group that make a ton of money, upper middle class, if they get laid off and do not get created in the new wave of workers aging into that demographic, how are you going to make more money as a company? How can Chrysler, GM, Ford, Tesla, Rolls-Royce, Bentley, how can they sell more cars, nice cars, to people who can't afford to buy nice cars because they got laid off 15 years ago, 10 years ago? They think they're getting laid off in the next 3 years. You're 50 years old, for example. You're in this nightmare zone because your kids are not out of the house yet, generally speaking. Soon to be, we hope. You've got the end of a mortgage to pay off, maybe the last $200,000 of a $400,000, $600,000 mortgage you took out just in the last 5-7 years. You're at the height of your career and hoping to hang on to it. You've got car loans. You've got demands on healthcare premiums. You're supposed to save for retirement. I mean, all the pressures of 50-year-olds are everything. And the other pressure you have is you're finding out through your friends at the office, and you're up there. You're not at the bottom rung of the office. You're in the upper half of the organization you're with. And you know something, and that is they're not hiring a bunch of kids out of school this year. The graduates at college, we're down to 10% of what we used to hire every year. And we're letting people go below me. And this is catching me. A year from now, I'm 51. 2 years from now, I'm 52. And that might be the magic number in 24 months where AI says, dump your 52 to 55-year-olds, and you won't grow age fast enough to stick around to make the big money in the last 5 years of your career. You're going to be let go right at the height of the demand you have, the highest demands you have from your career. And you're going to work every day asking, what is my future? This perception for Americans, Canadians, Europeans, G7, G10, G20 people, any of the top 20 countries in the world, if the perception of 45 to 60-year-olds is that within 1 to 3 years, I will be told, I won't be asked, I'll be told to get out. I can't find another job because the job I used to do is now being replaced by an AI software program around the world. And that kicks me out of the workforce. Now, for some folks, it's a blessing in disguise because they needed the motivation to get out. They wanted to quit, but they just didn't have the nerve, or they now have been pushed out the door and they will now reorganize their economic lives and they'll sell the big house and mom and dad are moving into something smaller, in a retirement community, kids be damned, you're on your own. And all of a sudden, the parents have just dropped their cost of living dramatically and are going to live on their new retirement lifestyle. God bless them all. Others are going to be in a real world of hurt. The stock market, in the meantime, where we are, right here, we're watching all this going on, going, well, this isn't going to affect me because I'm not going to be laid off. I've already quit my job. I'm trading stock full time now. I'm writing options like Uncle Bruce has taught me. I've taken Uncle Bruce's classes. There's that thing running along the bottom all the time. Hey, I don't have to worry about work. That's true. But you do have to worry about everyone else who may or may not be working. Because you might be okay personally, but the corporation you left, the industry you used to be part of, the economics of your region, your city, your county, your state, your country, you may find that wherever you are on the planet, that around you there is hardship showing up that you weren't anticipating or no one was anticipating as quick and as vicious as it would be. And you're wondering, how's this going to affect the markets? Because I want to make money as an option writer. Am I doing the right strategy as an option writer to keep making money in this market? There is the conundrum. And that's why we all have to watch the whole market globally. And if you can understand it from a plain English point of view, more power to you. By the way, a couple of other little tidbits for you. Today, at the end of the day, after the bell, Palantir releases their financials. Palantir is what, $205 a share? Can you believe it? You've been watching me now for 4 or 5 years, since 2021. We used to talk about Palantir in the $15, $20 window, $25 window. $205. Unbelievable. It's way overpriced. Its PE multiple is 600 times. However, tonight, when they release their financials, if Palantir's numbers exceed the street's expectations, it is possible that some analysts are going to say, hey, I know right now it's trading at 600 something times earnings. But I want to tell you something, kids. A year from now, the way this company is growing, the way NVIDIA is growing, the way others are growing, Palantir is only going to be trading at 85 times earnings a year or two from now. So don't worry about the current price of the stock, because in 2 years from now, they'll still be trading at 300 times earnings, which will be 600 a share, and you're buying in at 205. Not to worry. This was the mentality at NVIDIA 2 to 3 years ago, when NVIDIA was 100, what was it, 1,400 a share, 1,000 a share. Remember those days? 1,200 a share, 500 a share, 800, and then they ran it up and it split, and here we are now with NVIDIA at 5 trillion market cap. Anyway, tonight after the bell, and Palantir comes up. Last little ditty for you. We have to pay attention constantly to the news, and we have to try to discern and break the news down into tidbits that we can absorb. And we also have to be wise enough and willing to analyze enough news to determine whether news is good, neutral, or bad. And here's something I heard this morning. It was a comment on the developments in the last week or so, when there was a big meeting of government officials in Asia, the Chinese, the Japanese, the Indonesians, the South Koreans, and then of course Canada came over with Prime Minister, President Trump came over. All of these Asia Pacific countries were kind of getting together, and we saw and heard about the big meeting between the dictator of China and the new dictator of America. All right, so the two guys got together, and right away there was great news for everybody because the tariffs are going to be lowered and trade is back on again, and everything is fantastic. What I heard this morning really lifted these eyebrows, and that was that back in 2020, the United States and China negotiated a soybean deal to get the Chinese to buy American farmers' soybeans. It was a 2-year deal, supposed to last from 2020 to 2022. It was supposed to tally $56 billion of soybean purchases by the Chinese from American farmers. All right, 2-year deal, $56 billion. Sounds great, doesn't it? That deal fell apart. Several reasons. One, COVID and other restrictions, and then tensions. All right. This time around, here we are in 2025. Bassinet is the head of the Treasury, I guess, and the president were touting a new deal. We've got a new deal with the Chinese for soybean sales. 4-year deal instead of a 2-year deal. It's a 4-year deal, $34 billion. There's a problem here, folks. The old deal was $56 billion in 2 years, which is $28 billion a year. The new deal is 4 years, $34 billion. It's only $8.5 billion a year. This leaves soybean farmers in America $22 billion short over a 4-year window of projected sales that used to be the norm. And so it sounds great. The headline is great. Those who want to take credit for these great negotiations have done so. But if you read between the lines and analyze the figures a little bit, there are those out there who are saying, and this I heard this on Bloomberg today, we didn't get a very good deal here. And what I'm also hearing is that who did get a good deal? Where is China buying their soybeans from, if not from American farmers? Brazil, Argentina, and other countries have stepped in. You may have heard the term BRIC countries, BRICS, I think is BRICS. That's Brazil, Russia, Indonesia, China. These countries are teaming up to form their own alliance. And Brazil grows more wheat and agriculture than they can eat. And yet Brazil is one of the world's largest population countries. Argentina has all kinds of problems which needed and just received American help, but to the tune of a $20 billion bailout. You might be asking yourself, why does America give a crap about Argentina? And why should the United States bankroll the Argentinian government with a $20 billion cash investment? What's the point of that? I just told you. The Argentinians just signed a deal with the Chinese to flog a bunch of soybeans to them. Rather than soybeans from Iowa and the Midwest, they're coming from Argentina. And the United States, if they don't help Argentina and be their friend, they're going to lose an ally. Because right now, Argentina is leaning on America to help us out. We're desperate we're doing business with anybody we can because we want to solidify our country's standing in the world, because our inflation rate was 100% a week, our unemployment rate was insane, our currency is worthless, standard of living was falling apart. And so with a backstop of American dollars, Argentina is, yes, they are selling to China, so is America, but Argentina needs all the help they can get. The problem, unfortunately, for the United States is that the United States needs a lot more friends than just Argentina, but is reluctant, it seems, to want to invest in friends. And at the moment, the perception in the world is that America would rather go it with America First policies only and make it go of it that way. The problem with that, of course, is that if you don't help certain countries help themselves, they can't buy your stuff from you. And this is why Latin America is such an absolute disaster. Nicaragua, Guatemala, El Salvador, Costa Rica, these countries down here, Honduras, they're in real tough shape. And the United States has a choice: either try to block those people from coming up to the United States through illegal immigration and try to kick them out, or work a deal where you can turn these people into the workers you need, legal workers you need to up your economy, and therefore earn American dollars to then send home, which can be spent on American goods. So simple, but politically almost impossible. And anyway, there you have it. There's the story as I see it. It's interesting what's coming out right now. Here in Canada, I've only been back a couple of days. The anti-American thing is still here. Canadians are purchasing made in America goods. I was in my Costco store yesterday. I was in a Walmart yesterday. I was in a Superstore, which is a huge grocery chain. And the made in Canada signage is everywhere. Not only big flags, buy Canadian, but when you come to the peanut butter section or the pickles or olives or cereals or any area of the grocery store you want to go to, I don't care if it's Walmart Canada, if it's Costco Canada, it makes no difference. You will find the Canadian labels of Canadian made product everywhere. And I'm watching shoppers pick up an item from a shelf and they're reading where it's made. And if it's made in Canada, if it's packaged in Canada, produced in Canada, whatever, it has a better chance of selling. It is that basic, that intense, down to nickels, dimes, and quarters. That's what it is. I wish it wasn't that way, but it is. Anyway, there you have it. I'm just a guy traveling the world, back in Cowtown, saying hi, everybody. Welcome to today's program, impromptu, off the cuff. I hope you're doing well out there. Markets are open. Looking for, I hope, very good days for all of you. Very strong profits and tremendous capital gains and income gains. And I thank you all for your continued best wishes to Jennifer and I. We wish you all the best as well. I do see the Dow at the moment down 169. I think we've been open a few minutes now, 20-something minutes. NASDAQ up 162. SoFi is up 24 cents. I think I could be wrong. Let me just double check now. I have to coordinate my devices here to see if they're going to tell me what's really going on. 29.95, 29.98 on SoFi right now. So we're just under the $30 mark. Welcome back. GameStop at the moment, 22.15. It hit a high here of 22.30, but we're at 22.15, down about 14 cents on not quite a million shares of volume on GameStop. Rocket Lab down 143. Palantir 203.29 this morning, up 282. What a run that's been on. ASTS down 477, 75.48 a share. Microsoft up 530. Apple down 330. Nvidia up 549. Google up 96. Tesla up 1380. Amazon up 1080. Meta up $8. Netflix down 391. IBM at $310, up $3.14 a share. HIMS up 69 cents to 46.15. Strategy, MicroStrategy, 268.98, down 53 cents. Not much happening there. AI 17.26, down 33. Supermicro up 60 cents. Intel at $40, holding $40. Who else and who what? Where are we? Uber at 97.57, up $1. Look at that. Unity is at 37.70, and Pfizer's out down 8, HPQ down 40. Let's see here. Walmart down 42 cents at $100 a share. Welcome all to the show and the program. Hope you're making nothing but money out there. Cash secured puts or taking an interest is a way to go. Hello to everyone. Hi, Richard Carlin. Welcome. Thank you so much for your comments. Wing Commander's here. Tom is here. Is that Poochie is here? It looks like. What happened to SoFi? I mean, what happened? Charlie, good morning. Back home in Canada, Uncle Bruce. Welcome to all of you. Mandu number 5. Hector's here. Amy, Jane is here. Farlamus, my dad went full beard 5 years ago. It has been worth it. Yours will look great. Oh, thank you. Andrea Bongiorno. Good morning, everybody. Luca, welcome back, old man. Thank you. Walter, yeah, good morning, Uncle Bruce and Auntie Jen. Hello, Bagel Familia. Welcome to all of you. You have 141 people watching right now live. From wherever you are in the world, I thank you for joining in today. Thank you for taking the time to answer my poll question today. Thank you for these thumbs ups. If you can find the thumbs up button, please help us out. 59 and counting. Thank you for that. On the poll question, I've got 94 results now. It looks like we've got the question is: I make money as an option writer by choice number 1, writing call options, 31%. Second choice, writing cash secured puts, 55% of you. And the third choice I gave you today was using credit spreads. 15% of you are doing that. So that makes up 100% right there. 55% say I'm doing cash secured puts, 30% writing calls, 15 credit spreads. I know many of you do it all. You don't only do one thing. I understand that. I just don't have enough choices to give you. So I kind of ask you to give me your best guess. Thank you all for participating in the poll question. Thank you for the thumbs ups. It's much appreciated. Mike Equizabal is here. Emmy's here. How you doing, buddy? Walter Young, thumbs up. Phil C is here. Juan is here. Juan Valdez is here. Good morning, Bagel Familia. Rocketeer, good morning, Uncle B. And Bagel Gang. Juan and my November 21 expiry $255 Amazon call is now at the money. Let's go. Amazon, where are we at right now on Amazon? $254.85. Look at that. Sean, hey, morning, good afternoon, Uncle Bruce. I hope you had the best time on your world trip. I hope Auntie Jen is well. Also, we did, and we had a most interesting trip, and I'll get into details at a later date. I've got videos still to make on travel with Bruce as well. Travel with Bruce. Kibbles, 100% accurate prediction. Stocks will go up, down, nowhere tomorrow. Richard, good morning, everybody. Not a lurker. Someone needs to shave. Pickcomb, good morning, Uncle B. Jeff, wow, that world trip was rough on your face, Uncle Bruce. Not a lurker. Let's go. Blair, thumbs ups. Let's go. Bells have been ringing. James of the Trees, good morning, Lucky 37. Alberto, my nephew, how you doing there, buddy? Donation of $99.99. Thank you so very much for that. Good to see you, Uncle Bruce. Sincerely, the idiot nephew. Thank you, man. Appreciate that. All of you out there who are doing super chats, who are doing PayPal donations, you guys are great. We thank you. It helps towards the expense of the trip. We really did enjoy ourselves. It was a wonderful time. It was, for me, a most interesting trip. The first 5 weeks I was on my own doing the Japan, Singapore, Dubai portion of my trip, seeing 3 parts of the world I've never personally been to, bucket list all the way, flying business class on different airlines. That was great and unique and interesting. And then getting together with Jen, we did 2 cruises, and we of course went to Switzerland, and we did Rome a little bit, Vienna. We did enjoy it. Although Jen and I don't do what a lot of people do in Europe. That is, go to tourist spots, go to tourist things, and just hang out with hop on, hop off buses and do museums all day long. And that's not our style. We're basically living in different parts of the world when we get there, and we see a little here and a little here and a little here and a little there. That's how we travel. Totally the opposite of what we would have done 30, 40 years ago at a much younger age with a very short window of time. We're under no pressure to see stuff We're just taking our time to enjoy it. And so I thank you all. For those of you who have helped make it possible that we can travel the way we've traveled, and this gentleman right here is one of them, I thank you. Cameron, thought about Uncle Bruce during the SoFi earnings call last week. Rice check. Good morning, not a lurker. Whoa, Alberto. JV. Berkshire did the same thing in '04. End up lending Bank of America $5 billion during the real estate meltdown in '08. Let's open our eyes and learn from the guru. RB number 42, thumbs up. CKT, good morning. Not a lurker. Let's go. Stuart, good morning, all. Thanks, Stuart. JJ, great to see the Bagel Gang here this morning. Pickcomb, AI has to make up the workload. Not sure AI can achieve all those goals. Not that companies might mistakenly fire people for silly reasons. Perhaps AI might help network smaller independent businesses, though it's all in flux right now. Juan, great to see you here, Alberta. Hope all is well, my friend. Corinne, hey, hi, Uncle Bruce. Keith McMahon, I see that all over Ontario, too. Joel, in your opinion, what's going on with GameStop? I'll get to that. I've got thoughts on GameStop. A Pickcomb packaged in Canada means it might not have actually been made in Canada. So SoFi is up a little. Hostergaard, I am sitting at a cafe waiting on a date, and what do I see? Uncle Bruce. While I wait, wish me luck. Rock and roll. Bobby, morning, Uncle Bruce and everybody. JJ, SoFi Attractive this morning. Sharon, hi, Bruce and Jen. Welcome, Sharon. Hello. Crazy 49er, credit spreads for the win. We're at 30-12 on SoFi, by the way. So it's nice to see that break 30 again. We've got GameStop at 22.11. Kent's mom in the house. Hello there. We're in Los Cabo, Mexico. Kent is playing in a one-day Monday qualifier for a PGA Tour event. Wow, that is so awesome. 3 years ago, these weren't the comments I was getting from Kent's mom. Now the word PGA is showing up. This is cool stuff, man. Things are happening out there. Charlie, congrats, Kent. Good luck to him. One, you've helped make a lot of things possible for me, family's future. Uncle Bruce, very grateful. Wing Commander, ditch the date. Uncle Bruce is more important. Don't go on your date. There you go. Thank you all. Thank you all so much for these tremendous comments, and of course these donations. You guys are awesome. Thank you. If you want to make a donation to us through PayPal, and of course I can't thank you enough for that. You need to go to PayPal.com, and it says you want to send somebody money. You enter my name, and then look for Traveling with Bruce, which is the name of my first YouTube channel, Traveling with Bruce. That is how I set up my PayPal account way back when, and you can make donations straight to there. Thank you all who are doing that. You're wonderful. Again, if you're looking to go after learning how to become an option writer, and you're serious about making money in this market, you can guess and try to buy stocks, but I wouldn't do that. I would also caution you against trying to buy options and hoping you can get lucky with an option trade. Your best bet is to just head over here to my website and learn the art of writing options contracts. Whether you're going to do something really, really conservative, like writing call options, or something very smart, conservative and smart, writing cash secured puts. You don't have to own any shares or ETFs of any entity. You can literally, from cash only, haul in all kinds of interest on your money and write credit spreads or cash secured puts and haul in money. You can also, of course, buy long dated contracts like leaps. You can go 2 years out or longer, and then buy in the money contracts and then write option contracts on those options. That of course is called poor man cover call writing. My lessons cover all of this, including the psychology of the options market, how they're created, how they die, and how to properly buy and market them and not get caught with silly trades. But again, it's up to you. You have to decide, do you really want to make money in this market, or are you just hoping that one of your wild, crazy bets pays off? that's your call to make. I can tell you that many of the folks who watch me here and have followed me since 2021 are option writers because they did this. They took the classes here, 19 of them now, and they await you when you're ready to step up and really make money in this market. You have to pay to watch them, but then again, if you put a little money into yourself, you'll pay attention to these classes. It's funny how when a class is free, people don't give a crap, but when they have to pay for it and then try to recoup the capital that they put in, they go, okay, I'm serious. I mean it this time. I am going to learn how this stock market really works. And I'm going to watch some of these classes to see how this plays out. Thank you all. Juan says it best, classes 1 and 2 in plain English, and then for the rest of your life. There you go. I've heard that many a time. Host regard, there's a good chance AI will take over 1/3 of all jobs within 10 to 20 years. Is that good or bad? Depends on who we as society decide should benefit from it. Scandinavia is probably going to be focusing on the people. The U.S. is going to focus on becoming a thunderdome with the rich getting richer. Well, again, it all comes out to, at the end of the day, someone has to make the coffee in the morning. And in order for someone to make coffee in the morning, someone has to be able to buy the coffee beans somewhere to make the coffee. And those can't be done by AI. Coffee is grown and harvested and exported, graded, exported, roasted, then brewed, distributed, brewed, and enjoyed. That's coffee. Now, you want to eat some cereal in the morning? You want a slice of bread with a little bit of peanut butter on it? People need to make that, import that, distribute that, sell it, resell it, wholesale it. You want bacon and eggs? You want a steak at night? Anything and everything to do with anything and everything we do as a species requires humans to make it possible. It can't be done by machines. It has to be done by human beings, with machines assisting. Yes, very much so. Robots can do a lot of work, but there are people who make the robots work. There are people who build the robots. There are people who build the robots that build the robots. It goes on and on and on. And traveling the world this last 3 months, I've seen very well-to-do societies. I've seen parts of societies not quite so well-to-do. And it was interesting to see the world from like Japan, where there's a country that is so far down the road, where it comes from where it was in the Second World War, to say Dubai, which did not exist like we see it now 40 years ago. Dubai in 1975-85 compared to 2025, you can't recognize the place. And yet Dubai needs 90% of Dubai people who live there and work there are not from Dubai. They're not from the United Arab Emirates. 90% of the people who live in Dubai are expats, foreigners, and the wealth is unmistakable. And all the skyscrapers and all the condos and the shopping malls and the highways and everything else will be left behind in Dubai once the foreigners move on. And the thing about Dubai and its foreigners, it isn't 90% who have come there and aren't leaving. It's a turnover game that takes place. And this is what happened that I saw firsthand in the 2000s when Jen and I and Jen Jr. lived in the Cayman Islands. The Cayman Islands are 90%, 80% foreigners. And I can tell you that back in 2000 versus today, I would bet you 5% of the foreigners that were in Dubai in 2000 are still there today. 95% have left. They've either passed on because of old age, they've returned back to where they came from, or they went to another offshore opportunity, as opportunities come and go. And this is the same thing in Dubai. People who are in Dubai in 2000 versus today, there are many more of them, but they're also turned over. They have turned over multiple times. And in the next 20 to 30 years, countries like Dubai, Saudi Arabia, Qatar, Bahrain, any of the booming Mideast areas, and countries that are pro-growth, that are open to having expertise come in and develop their country forward, all of these people turn over, and life continues on. But again, there will also be, in the next 10, 20, 40, 50 years, dictatorships, closed border countries, and countries that are just debating within themselves what's best for them going forward. And this will never end. It will never change. And what one country does that works for it will not work for another. It just isn't going to happen. You just have to kind of go with it. But I've enjoyed the travels very much. Anyway, there you go. SoFi's on the move, says Walter. Juan, don't forget the thumbs up for Uncle Bruce, Zed Estate. Someone needs a shave. Good morning. Charlie, it's right about bagel time, I think. I told Jen no bagel today. I'm not here to do a bagel on the air. I'm here to say hi and thank you and congratulations and encouragement to all of you. Just keep it going. Keep doing what you're doing. Get better at what you're doing. Become a prolific option writer. Don't ever stop that. Don't get caught with stupid wild gambles in the market. And if I can help you in any way, I'm happy to do it. You know how to find me. Just send me an email and we'll look at a one-on-one situation. That would be terrific. Thank you again for those of you who have moved into classes and who have become option writers in the last several years. You are definitely on the right track, and I think you'll do very well. What are your thoughts on SG and GameStop? Zed Estate, can you please make GameStop run? I love the GameStop situation. I don't like where the price of the stock is. Let's be clear about that. Do I want the stock higher than 22.08? Yes, I do. Will the shares go higher than 22.08? I think they will. But what will make it happen? And a couple of things are going to move this market. But there's something big going on, I believe, behind the scenes. And I have some speculation on what that is. And I'm going to make a video about that, maybe tomorrow, day after. So stick around for that. I have an idea in mind that what's going to make this stock really go. But at the end of the day, the market cap of GameStop right now is $9.88 billion. At $22.07 a share, the market cap of GameStop is less than $10 billion. We all know that there's $9.1 billion cash in the company's cash register and $500 million in Bitcoin. We all know that. We also know that they have 3,300 stores still functioning, and I believe that the 3,300 combined locations make money for the company. In other words, they're building their cash reserves by just being GameStop. Yes, there are warrants outstanding that have been issued, and yes, they're exercisable at $32 a share. I believe between now and a year from now, these shares will be nowhere near where we are now. They'll be substantially higher. All warrants will be exercised. The company will have in excess of 12 to 13 billion in cash on hand. That alone puts the shares 30% higher than where they are now, which would be $28 a share. But that's not where the shares are going. I think the shares are going into the 50 neighborhood, the 60 neighborhood, based on a number of factors coming up. I'll talk about that shortly. And at 22.08, this is just an opportunity to get involved in this stock through a cash secured put trade if you want, or any other way to get involved. Credit spreads, knock yourself out. Anyway, thank you. Juan, thank you as always for all you've done for us. Best one-on-ones I've ever had. JJ, thank you, Uncle Bruce. Zed, BBAI, Big Bear have 2,900 shares so far. Hostergaard, UPS, she is here. She's here. Have fun, everyone. Good luck, Hostergaard. A game to the what's it hells? Yeah, whatever. Been in since 2021. Let's go, Charlie. Glad you're back, Uncle Bruce. I'm going to have a schedule or one-on-one real soon. I got my brother to jump into the options trading with both feet. He might join us for a one-on-one. Definitely can be done. If you have a relative, a friend, a mother, a father, a brother, a sister, a cousin that you've been talking to me about, you can always arrange one-on-ones where you might be in one city, they might be in another, you might be in Canada, they might be in the UK. We can do a one-on-one with them. We just have to coordinate between them a time with me, of course, and we'll set it up. So if you want to do a one-on-one, just the two of us only, or a one-on-one where we can do 2 or 3 or 4 people together as a group, you let me know, and we'll set that up. You guys figure out who pays who to do the one-on-one, and we'll get it looked after. Okay, thank you, everybody. One, GameStop is going to hold so much Bitcoin that the government is going to invest in the company in some way, invested in Intel. One, they will wait for private markets to establish the cryptos in their balance sheets first, then get involved. Zen, when will GameStop earnings report? I don't know yet, but I do know that at the end of October, 3 days ago, was the end of the quarter. So that was the end of the third quarter. And sometime this week, they'll probably announce their scheduled release of finances. And probably no conference call. We'll find out. So we should know in the next week or so, Zed. So just sort of stand by. The calendar is moving, and I figure the first week of December, GameStop will reveal. And I think their reveal will be very good. I have a suspicion it'll be very, very good. And we'll see what gives. All right, one last peek here at our thumbs ups and our poll results. 122 people have now voted in the poll question of the day. Thank you, everybody, for doing this. 80 thumbs ups have come through. Thank you all. 127 of you are here. I appreciate it. We have 55% of the folks answering the poll question today saying that I make money as an option writer by writing cash secured puts. Just over half of you are doing that. 30% of you are saying the primary way I make money writing options is writing call options. And 15% of you have responded to say, I make most of my money as an option writer using credit spreads. And if you have watched my classes from 1 to 19, all 3 of those methods have helped you in your goal of hopefully retiring more comfortably, retiring earlier, dealing with a sudden loss of your job, and you went, oh, okay, I can't work for you anymore, but I can now write options for a living full time. I'll do that with Uncle Bruce. And many of you have said, you know what, Bruce, I still work full time, part time. I work weekends, I work whatever, but I write options because of you and your channel and your classes. You've changed my life. You've changed my attitude on this entire world. I travel now. I have time for my family, my kids, my pets. Thank you very much for changing my entire game plan on a day-to-day basis. I like this game. Thank you, Uncle Bruce. And away we go. Juan, first week of December, if I'm not mistaken, GameStop will release their numbers, says Juan. Kay Kusher, December 9 is when we're going to find out. So there you go, kids. It is somewhere in the first part of December. Usually their year-end or their quarters are 30 days off the majority of companies. Most companies, third quarter end of September 30. In this case, for GameStop, it's the end of October. And so first week of December or so, first 10 days, they'll let us know. All right, kids. Have a great day today, everybody. Thank you for saying hi to me and popping by. Appreciate it. Keep up the good work, everybody. Get richer. We'll get some videos together here in the next few days, and we'll fill you in on some ideas that I have. And Jen and I have got a little bit of paperwork to do now that we're back here in Calgary, and we're getting things set up. Thanks again for all your support. I appreciate it. Make a bunch of money out there, kids, and get richer. Okay. Thank you, Juan. Thank you, all of you who have popped in this morning and who are watching this on the rerun later today. I thank you very, very much. Much love. Thank you, Bagel Babe. Pick Comb, Uncle Bruce and Jen, welcome back. Rocketeer, always nice having you around. James of the Misty Trees. Neat, neat, neat. Don't forget those knee emojis for the Knights of Neat, the power behind this market. We'll keep an eye on it from here, and we'll keep you posted on what's going on. You do the same with us. Thanks, everyone. We'll talk to you later. This is Bruce and Auntie Jen in the other room, who are thinking it might be time to say bye.